Okay, morning everybody.
I said let's get out. But you weren't here.
All right, stocks across the US extended gains to rebound for a second day of the August lows. Employment and GDP data beat expectations with solid numbers adding fuel to the tapering fire. So the employment data was a slight beat. The GDP beat by quite a bit, and that we could see the gold price immediately came off, but not too much. Still holding around the levels where they closed last night. Asian stocks outside of Japan gained as prospects for an imminent strike against Syria diminished, and more than that, the UK Prime Minister David Cameron failed to gain parliamentary backing for military action in Syria, which, as you can see, the oil price is just under 1% lower than last night. Then 7:30 this morning, Woolies was raised to buy versus neutral at Bank of America. Ex-div today, or ex-div on Monday, should I say, is Billy's 66 US cents and MTN 3 Rand 70. So two heavyweights there going ex-div. This morning there was consumer confidence out of the UK. Looked like it was slightly worse than expected. Jobless, strange, one in the morning, it comes out of the UK. That doesn't make sense. Anyway, 1:30 Japanese jobless rate, slightly less than expected. National CPI in line, industrial production a little bit light, housing starts a bit light. And then this morning, nationwide house price index out of the UK was a slight beat. German retail sales a beat. SA money supply and private sector credit was a little bit light. I'm not sure how that will affect the retailers and banks. We can keep an eye on it. UK mortgage approvals 10:30. Consumer confidence at 11 out of the Eurozone. SA trade balance at 2 o'clock, so we're going to keep an eye on the rand after that number comes out. And then out of the States, we've got personal income and spending at 2:30. At 3:45, we got Chicago PMI, and then at 5 to 4, we have University of Michigan conference. All right, let's have a look at the charts. All right, for the most part today, I'm going to just go through a lot of the charts we've been looking at for the last 2 weeks. I'm very hesitant to actually give real recommendations on what to buy and sell, just given how volatile the market is and potentially can be going forward for the next few weeks. I'm going to show levels just to keep an eye on for any potential trades that you'd like to put on. The first one I'm going to show is the US dollar rand. This is one we've been following the whole year. I know Joe and I in December were talking about it, December and January. You can see how we formed a broad cup and handle, going back all the way back to 2009 when it started. This broad cup, the handle, and from then it's just been a perfect stair step all the way up. The target we gave from this cup and handle was going from 6 Rand 50 to 8 Rand 50, projected a target to 10 Rand 50, which we actually touched already. But this is a weekly chart. If we go down to a daily, we can see how the price at the moment is consolidating right above this sort of 1025 level, and it looks like any further market turmoil could easily send us through 1050 on a closing basis. And if we have a look, going back to, let's just go back to this previous spike in 2008, there's no reason we can't see a blow off like this if we do see some real market volatility to end the weakness in the rand. All right, so the last few days we've been following Angry Gold Fields and the gold price. So the gold price actually has held up quite well, and given the good GDP number, and it's I think the inflection point on this was 1350. It's been in a solid uptrend since then. Based on this target from this consolidation, we're looking at probably about $1,500 for potential on the gold price, but it doesn't mean it has to get there in a straight line. If we draw a trend line going up, I would say a move below 1400 could see us go test this breakout at 1350. Otherwise, if we get a bounce off this line, then, as I say, the 1500 and the 200-day moving average is a possible target. And then let's have a quick look at Anglo Gold and Goldfields. Now, they were extremely difficult to buy yesterday. They got to those levels we were looking at, the 20 and 50-day moving averages, or the 20 for Anglo Gold to buy on. But we really didn't see any strength in our session to buy on those levels, so I wouldn't have advised buying them. But Anglo Gold has bounced a lot in the States. It's from where we closed. The rand price is 137.84, which is approximately $3-4 higher. So we might get that reversal today. If you have an appetite for gold stocks, and they have been extremely volatile, so I do recommend playing it very light if you do play it. Then we could get a possible positive day to buy on today. And the same with Goldfields. The level we were looking at was to buy a reversal off was about 52.50. They closed probably on that line or just below. So if we do get a reversal out of that, there could be a little bit of upside on Goldfields again. I reiterate, play very lightly. These gold shares are moving 10% overnight often, so be very careful. So let's have a quick look at Amplats. Amplats, for the first time after quite a massive uptrend from 280 straight to 420, we've put in a couple of negative candles in a row. It is possible that we do retrace on this. We are sort of massively overbought here. Targets to the downside. Again, it's a very difficult short, so I'm not going to recommend you shorting it. So either, if you don't like platinum or for whatever reason you don't like the platinum shares, you can maybe look for a sell below this immediate trend line, which we're pretty much approaching right now. Possible downside targets around 380 and then 360 for Amplats. But then again, after that, you're probably going to start looking to buy it. Then let's have a couple of property stocks. They're looking quite similar. Last week, Joe recommended a sell below 23.50. At the moment, it's consolidating right on that sort of level, that 23.50 level. It's closed up above it 1 or 2 days, then it's closed below it a couple of days. I think, if I had to make a decision on this one, I would be short of it at current levels, and I think a close below 22.90, which was the previous low, could see these stocks going quite significantly lower. And if I look at Redefine, you see very similar pattern. The rough support around this 9 level. We get a close. We're consolidating right around that level. If we get a close below that level, or sort of 886 as the previous low, then you're probably looking for a short to get it down quite a bit, maybe 5 or 10% in quite quick time. Then Woolies. Woolies had that massive bounce on positive earnings yesterday. Came right off support, and what was up yesterday? 8%. Yeah, so it's a big move for Woolies. Upgraded again today as we showed earlier. $68 I think is the line in the sand for this range. Again, it's it's a difficult one to buy because of all the previous weakness we've had, and also the possible weakness we're going to have in the market going forward for the next few weeks. So I'd be cautious. I'm not sure I'd pile in it here. If it gets to 68 and shows some weakness, maybe it's a short, but I wouldn't like to recommend anything right now. If it gets through 68 and we get some stability in the market, then I would say that it's a good buy, and I do think it's a buy over the longer term. So if we do get a little bit of weakness in the market and this comes off as a result, we definitely want to be looking for places to buy it. Let's have a look at MTN. MTN closed down and ran in the auction last night, so there's a possibility we get a bit of a rally this morning from it. So it's also what's come to today, so there might be some guys that want to take it for the dividend. But if we look at levels on MTN, we're looking at 175 as a major level. That's where the immediate trend line comes in. We're looking at 185 as a possible level, as well as the 50-day moving average at 185. There's a few different levels here. There's a bit of a level, yeah, 175 I'd say is a major level, 180 as well. MTN is definitely one we're looking to buy on dips. Again, it's going to be affected by a volatile market, so we've got to be careful depending on your time horizon. I do still think that it's got a target into the 200s. Over the last little while we've been following this. If we go to a weekly chart here, so this was our immediate breakout from this sort of inverse head and shoulders continuation, 185 to 157 more or less, sends us right through at 200, well into the 200s. I do think it gets there again, but most likely there will be a correction if the market corrects. So again, looking to buy MTN on dips. The two charts I wanted to show, SA Breweries. SA Breweries, let's just go back to the daily chart. It's broken out of a bit of a flag pattern, continuation flag pattern. These are like sort of one of my favorite patterns to trade. That quite high percentage trades. My only concern about SA Breweries is if I look at the chart in London, it's a completely different scenario, and it actually looks quite bearish. It actually looks like it's broken down from a flag. So that's the difference the rand makes, and that's why I'm not all that keen on taking that SA Breweries trade, even though great setup here. Let's just have a look at it again. Great setup here for it to go higher, and the potential target, if it does go higher, is around 533, I think it was, from the height of this flag. So if you like SA Breweries, a good one to buy, a good breakout, but with caution because the LSE chart doesn't look that great, and but then again, the rand looks like it could weaken further, so maybe it will work in your favour. And the last one I wanted to show out of the UK is Rio, and this would affect Anglos and Billies. Showing a bit of a short-term head and shoulders here, if we want to draw it in here. This is showing down a target down to about £27, which is quite a lot lower than it is now, and which could possibly mean weakness in the sector, the diversified mining sector. That's all for today, guys. Good luck.